we'll give people another 5 minutes or so before and that means Meredith, officially kick off in a second.
Good morning, good afternoon, and good evening to everyone. A special thanks to those who are waking up early and staying up late to participate in this session. I'd like to give a formal welcome on behalf of the Business and Human Rights Resource Center and VentureESG. Today's session, we're going to focus on the importance of human rights due diligence for venture capital, and we're going to connect human rights risks to material risks within the context of AI. And today's session is really about working together to share experiences and progress, exchange valuable resources to make human rights due diligence by investors more prevalent and meaningful, and hypothesize new approaches to stakeholder engagement between tech investors and digital rights groups, so that we can more closely work together to fill knowledge gaps and ensure that investors have useful information to act when human rights concerns arise with current or potential investees. And we're hosting this session today because investors in tech companies hold significant influence over the design, development, and deployment of digital technologies, especially at the early stages of investment. And in the digital rights movement, building a strong network of allies within the investor community and helping to establish rights-related requirements for tech investment could have a significant impact on corporate behavior in the tech sector. The global digital rights community, however, has faced a number of challenges in engaging with tech investors, which we'll delve into later. But while these challenges may be steep, conditions for effective engagement should be better than they ever have been. And we think this is for a number of reasons, including the impending mandatory human rights due diligence legislation and the EU AI Act in the European Union. The US Federal Trade Commission has had a number of recent actions to try to hold big tech to account. There's mounting tech-related requirements coming from the Securities and Exchange Commission in the US. And data protection watchdogs are becoming more creative in their enforcement strategies for privacy violations. And there has been increased scrutiny from legislators surrounding the impact of artificial intelligence on society and the harms that dual-use technologies can have on democracy. And we've seen that investors are becoming more attuned to the need for socially responsible and rights-respecting investment practices. We've also seen an incredible number of voluntary standards and pledges that tech companies and some venture capital firms have committed to regarding responsible investment in AI. And this is a very important first step, but now what we need is a multi-pronged approach to ensure that these commitments to safeguard human rights become more the norm rather than a noteworthy or newsworthy exception, and that they're translated into concrete and visible action. The Resource Center this year struggled to engage with a majority of the venture capital firms that we had contacted when we were trying to get more information about responsible investment practices. And Danica, if you can switch to the next slide. This outreach was a part of research that we were doing with Amnesty International, and we're publishing a report tomorrow, December 13th, which looks at the extent to which leading venture capital firms are conducting human rights due diligence in their investments in companies developing generative AI. So we surveyed the 10 largest venture capital firms and the 2 largest startup accelerators most actively investing in generative AI. And the results showed that they are largely ignoring this responsibility that they have, as outlined in the UN Guiding Principles on Business and Human Rights, to respect human rights when investing. And we saw that 3 out of the 12 did mention a public commitment to considering responsible tech in their investments, but only 1 of the 12 explicitly mentioned a commitment to human rights. And 1 out of the 12 stated that it conducts due diligence for human rights related issues when deciding to invest in companies. And only 1 showed that they support their portfolio companies in developing responsible tech. So this is particularly concerning given the potentially transformative impacts of generative AI technologies, and how this could impact our economies, politics, and societies. And I'm sure we can all think of a really salient example in our minds of how generative AI has made the news lately, which is why we need to work together on making this important shift towards human rights due diligence for those who are funding AI development. And we're really grateful that you are spending 2 hours of your day today with us, especially during this incredibly busy season. And we hope that this session is a start to a new and fruitful relationships moving forward, and the spark of ideas for potential collaborative work going into the next year. And we can change the slide. Just to quickly run through the agenda. So for the first half of the session, we are going to hear from Valerie Santos from the US Department of State, who's going to highlight the Biden administration's work and priorities in relation to responsible AI. And then we'll hear from Stephanie Seal and Ben Fiddler from BTech, who will share more about their work on generative AI and also the development of guidelines for venture capital. And then we'll hand it over to Kindra from BSR to talk about how she and her team are advising financial actors on human rights related risks concerning AI. And Johannes will moderate a panel with our colleagues from AP6, Atomico, and Stepstone, so we can learn more about the investor perspective. During the second half of the session, we are going to have a few interventions from digital rights groups to highlight some tangible case studies. And then at the end, we really want to open up the space for dialogue between everybody on this call. And we have a few guiding questions to steer that conversation. And just a final note before we jump in, the discussion today is Chatham House rule. And we are recording, as you may have noticed, but this is more for note-taking purposes, and it's not going to be made publicly available. So without further ado, we can get rid of the presentation and hand over to Valerie Santos, who's an officer within the Bureau of Democracy, Human Rights, and Labor at the US Department of State, focused on internet freedom and business and human rights. Valerie, thank you so much for joining us today.
Thank you. Thank you for inviting me to speak with you today. AI, as we all know, holds extraordinary promise and peril. Rights respecting AI use can help solve challenges while making our world more prosperous, productive, innovative, and secure. At the same time, irresponsible use could exacerbate societal harms and poses risks to national security. Harnessing AI for good and realizing its myriad benefits requires mitigating its substantial risks. This demands a society-wide approach that includes government, of course, the private sector, academia, and civil society collaboration. I'd like to discuss the approach of the Biden-Harris administration and then highlight the important role we see investors can play in influencing the industry for good and for a digital ecosystem that reflects democratic values and respects human rights. Experts estimate that AI can advance progress on nearly 80% of the UN Sustainable Development Goals to support food security, healthcare, and energy needs. AI technologies can also promote respect for human rights, for example, through applications that combat human trafficking, remove barriers for people with disabilities, analyze data to flag patterns of discrimination or abuse, and help human rights defenders comb through vast troves of photos, videos, or text to hold governments accountable. AI tools are often part of smart community approaches, which can enhance capabilities and improve efficiencies across industrial and societal sectors by incorporating digital technologies at many levels. Such efforts must protect privacy, civil rights, and civil liberties, and domestic efforts in this regard can inform international projects. We remain clear-eyed about the need to counter the growing misuse by governments around the globe of AI to facilitate repression and authoritative practices. Particularly notable concerns include those related to arbitrary and unlawful surveillance, profiling, automated government censorship, and disinformation. AI-enabled surveillance offers governments new capabilities that, without appropriate safeguards and oversight, can be misused for repression. Today, we are particularly concerned about the misuse of technologies such as commercial spyware to unjustifiably target journalists, activists, and perceived critics. These technologies provide unfettered access to intimate personal details on users' devices, including texts, photos, contacts, and location. This intrusion can happen without the user's knowledge or even the need to click links. AI is misused to find 0 days for these intrusions even faster. What will tomorrow's technologies be able to do? And how can we prevent authoritarian governments from their improper use for domestic or transnational repression? On October 30th, President Biden signed an executive order on AI, which seeks to promote the safe, secure, and trustworthy development, deployment, and use of AI. The EO builds upon the administration's prior work with the Blueprint for an AI Bill of Rights, the NISC Risk Management Framework, and the voluntary commitments from leading U.S. tech companies. This EO advances the administration's AI policies in accordance with guiding principles and priorities that include promoting safe and secure AI, promoting responsible innovation, competition and collaboration, supporting workers, advancing equity and civil rights, protecting consumers, and leading the way to global societal, economic, and technological progress. These principles and the detailed steps laid out within the EO represent a framework that can help shape how governments around the world develop their own policies to govern AI. The administration is also taking a government-wide approach to counter the misuse of commercial spyware. Earlier this year, President Biden signed an executive order that restricted for the first time the U.S. government's own use of commercial spyware that poses a risk to either national security or human rights, and developed a joint statement on efforts to counter the proliferation and misuse of commercial spyware with 10 other countries, which included a commitment to engage investors like all of you about the risks associated with this technology. Leadership is not measured solely by technological advancements, and innovation should not come at the expense of human rights. We must pioneer those systems and safeguards needed to deploy technology in a responsible manner, and build and promote those safeguards with the rest of the world. Only then can we shape the global evolution of technology in a manner consistent with democratic values. Here's where you as investors come in. Governments cannot ensure the promise nor counter the perils on our own. This will take a multi-stakeholder approach. Private equity and venture capital firms play a critical role in providing funding and expertise to startups developing new technologies and can influence the way these businesses operate. We see that you can make a difference throughout the product life cycle, providing resources upfront to founders on human rights considerations, encouraging businesses to develop and implement a human rights policy. It can't just be on paper. Employing persons with disabilities in research and development departments, building safeguards into their products, services, and contracts to mitigate risks, creating a culture of transparency, implementing regular testing or monitoring and evaluation systems, and requesting companies to establish grievance mechanisms so that people can report misuse should it occur. In addition to the other available resources, the State Department released due diligence guidance for their surveillance tech sector a few years ago. I encourage you to read through it and consider how it might be more broadly applicable and how it might be possible to incorporate some of the suggested actions into your investment activities. Civil society can be an important resource as well. These organizations are on the ground and can help to point out developing trends that might be of concern. They may also help identify opportunities for technologies to advance democracy and facilitate their reporting and advocacy work. We are seeing the momentum build toward responsible AI development, with voluntary commitments from tech companies and from investors. We hope that you will join this chorus of voices and be an active driver of responsible, rights-respecting technology development. Thank you, and I look forward to the discussion.
Thanks so much, Valerie. And we can continue now with our colleagues from BTech, which, for those of you who are not familiar, this is a United Nations initiative that has been around since about 2019, if I'm not mistaken. And they are actively providing guidance and creating spaces for tech companies and publishing resources for how the UN guiding principles apply within the tech space, including for tech investors. So I'll hand it over now to Ben and Stephanie.
Thank you, Meredith. Can y'all hear me? Yes, great. Okay, I was having tech issues and was slightly worried. Here we go. Yeah, thanks for that introduction. My name is Ben. I am an advisor to the BTech project, which, as you've just heard, is part of the UN Human Rights Office. And we do focus on basically creating guidance related to the protection of human rights in the tech industry for various actors and stakeholders, one of which is investors. Another thing that we're doing, firstly, we just wrapped up the first phase of an ongoing project looking at human rights risks connected to generative AI. And the thesis of the project really is that, there's a lot of discourse around potential negative impacts of the development and deployment and use of generative AI. But a lot of that discourse, it's often framed more in terms of responsible AI or ethical AI, and those are great. But it doesn't necessarily get to the heart of the matter as we see it, at the UN Human Rights Office, which is that in most cases, these adverse effects of generative AI, they're not just broadly negative societal impacts. They're actually negative impacts on internationally protected human rights. And so we think it's really important for all stakeholders to be using the international human rights framework as a lens for conceptualizing how generative AI may negatively affect people. And so in order to aid that process, part of what we did in this project was to create a taxonomy of human rights risks connected to generative AI, which I think we're putting a link to in the chat. And what this document does is examine a whole slew of fundamental rights and then provide examples for how these rights may be placed at risk by the development and deployment of generative AI. And for the purposes of this session, using this human rights lens to think about the impacts of generative AI has important implications for investors, right? We know that risks posed to people by investors' portfolio companies consistently translate to material risk for investors. And it's true in a number of ways, right? Risk to people mean heightened reputational risk, regulatory risk, risk of lost partnerships. And the surest way for investors to understand the full complement of risks to people posed by a portfolio company or a potential portfolio company is to understand these risks to people as risks to human rights. And for investors to use the international human rights framework as the rubric against which they examine startups' business models and associated risks. We see this as a blueprint for investors to come up with a full list of potential risks they may have to contend with. And it's exactly what we want to see VCs do regarding investments in generative AI specifically, where many of the risks are emergent or not necessarily apparent before doing a bit of digging. Now, that's sort of the structural framework. Then the question is, how do investors do that, right? And what do these processes actually look like? And one of the other work streams that we have at BTech that me and Stephanie, who you're going to hear from in a second, lead, focuses on creating guidance to help investors understand and assess human rights risks connected to their investments. So I'm going to pass over to Stephanie to talk a little bit about that work and what we're doing there specifically in the VC space.
Great, thanks, Ben. Also had technical problems, but slightly different than yours. It's good to see you all, and slightly belated, but happy Human Rights Day for those who celebrate. So briefly, just to backtrack a little bit, prior to the work for the VC space, we did work on an institutional investor model earlier this year. Many of you were involved, so thank you for your support and thank you for your help. But what we did was really to focus on human rights risks that are linked to tech company business models. And for that, we were looking at more established tech companies with more sort of entrenched business models. And by that, we were looking at core methods of creating value, converting that to revenue. And we recognize that the VC and sort of startup companies have more kind of mutable business models. They're newer, they aren't necessarily more established. Many VCs are investing in ideas or in people. So that was a lot more complex, and we'll get to that. But for the institutional investor piece, what we decided to do was engage civil society organizations and some investors and some tech companies too. And we engaged in a number of consultations to figure out what sort of questions investors really could ask of investor relations at tech companies to get at the core of what they were considering in terms of their business models, what level of human rights due diligence they were engaged in, recognizing that it wasn't necessarily a binary, or that wouldn't be a sufficient response. Yes, we engage in human rights due diligence. No, we don't. But to what extent, and whether it's an ongoing process. And so the tool, which I have here and I can post in the chat, is really intended to equip investors with a series of questions that will help them gauge this level of understanding and of investment, so to speak, in the human rights framework of these tech companies. And in order to do that, we recognize that it would make sense for for investors to look at sort of scenarios and types of business models or business model risks that might be a little bit more recognizable, as opposed to being something very high level. So I always forget this, or we have it written down. And it's in my notes, and now I can't find it. So we have investor or engagement cards, and so we're looking at sort of high risk customers or end users. We're looking at investment in conflict settings, conflict affected settings, low leverage sales practices where the companies might not have that much impact or ability to influence their the sales process, if it's a third-party sales process. And so we've had a lot of good response, particularly with many of the European investors in our network. And we had a series of webinars, much like this one, and we had an in-person session in San Francisco in June where there was a lot of enthusiasm. And actually, I'm sorry, we had a couple in person in June, and a lot of enthusiasm and a lot of, and now how do we get more US-based investors to pay attention, and how do we get the venture capital community to pay attention? So we turned our attention to developing a tool, a comparable tool for the venture capital space, and began conducting conversations with LPs and GPs to the extent that we could, and civil society allies, much like yourselves, in these conversations to figure out how we could adapt this tool. And we learned pretty quickly that it wasn't really just about adaptation, but we really had to rebuild the tool from the ground up, because it wasn't just that we could tweak it a little bit because of everything I said before about how the business models were frankly just very different. And we couldn't just say, we're going to look at these the risks involved, the human rights risks and potential harms of these products, and encourage folks to engage in human rights due diligence, recognizing that really at an early stage it might be a lighter process because it wouldn't necessarily resonate with the VC community. So we decided to take a step back, and what we've done is developed a primer on human rights risks and human rights harms related to tech products and tech services, and specifically geared at the venture capital space. And that is for VCs and LPs both, that GPs and LPs both, that has really come from many consultations where people have said, we're GPs, but it's the LPs who make a lot of these decisions, so you really have to gear it towards them. And then we're actually in the process of reviewing that with many experts. And then we are doing the second stage of the excuse me, of the resource, where we're creating sort of a toolkit and one will be for GPs, so they can help work with their investee companies and help guide them through the human rights due diligence process, which, as I mentioned, might be sort of light touch, perhaps for early stage companies, and just really sort of recognizing the potential risks that their companies and their products might engender, but it might get more involved as the companies evolve. And then for LPs, it might just be a checklist so that they're aware of the potential risks of the companies that they're investing in and the funds that they're investing in. And I think that's mainly it. What we're hoping to do is work with a variety of investors and at different sort of stages and in a variety of different sectors. We recognize that similar to the institutional investor piece, we have to use scenarios and sort of real world examples of the types of companies and products and services that they're investing in, and for it to resonate. We have used a lot of language around the guiding principles and how under Pillar 2, investors are also companies, and so they have a responsibility to respect human rights. And we've discovered that that doesn't necessarily resonate with many investors for many of the reasons that Meredith spoke about in her introduction, that this language is, for one reason or another, not all that engaging for the VCs that you're trying to talk to. So we're looking to you all and your wisdom and your guidance, because our project is still a work in progress, and we're really eager to make sure that this lands. We recognize that this is just one piece in a larger ecosystem of tools and resources for this community, and it's a start. Ben, anything to add? Thank you for putting our information in there. Yes, yeah, please reach out to us. We would love to hear from all of you.
And moving swiftly along, because we're just slightly behind, I'll pass it over now to Kindra, who is a business and human rights attorney with more than a decade of experience working on social and environmental sustainability. And with BSR, she advises financial actors on innovative solutions to address human rights risks and impacts, including stakeholder engagement and the development of grievance mechanisms. And she has a plethora of experience working with some VCs that are domiciled in the US. So handing it over to you, Kindra.
Thanks, Meredith. Thanks, everyone, and really appreciate the remarks thus far from Ben, Stephanie, and Valerie. They really certainly resonate with my work, and happy to be here with you all. Donica, would you mind moving to the next slide, please? Thank you. So conscious of time, really wanted to jump in with just some framing for my portion of our conversation today. And I'm sure you're all here for the same reason, largely about this conversation, the intersection of AI, human rights, and investing. So likely aware of many of the issues that we've uncovered in our work across asset owners and managers, as well as PEs and venture, working on this issue together. And over the past 5 years or so, both our financial services team and our tech and human rights team have worked extensively with tech companies and financial institutions on the human rights impacts of different technologies, one of which is AI. And as you're familiar, I'm sure there are a number of risks and opportunities associated with the technology. And, we've seen current use cases that focus on text summarization or automated content generation, lots of possibilities there, applications that are still in early stages, but we, certainly expect to see growth across different sectors, including healthcare, education, and finance, which could lead to great opportunities for a large number of people who may not have otherwise had access to the market and jobs and healthcare and so forth. the same time, we also see, journalists, public interest groups, folks here on the line, civil society have been calling out the risks and negative impacts associated with AI, Gen AI in particular. Lots of examples out there. Certainly you can click on these links to learn a little bit more, but everything from scammers using Gen AI to create synthetic audio content, cloning children's voices, to extort parents for ransom money, to the multiple lawsuits we've seen thus far over the course of the year on intellectual property infringement, including against Meta, Stability AI, and OpenAI as well. So in response, and in part of the growth of the industry and the tech, regulations are certainly catching up. And I'll dive into this in a bit more detail shortly, but there are quite a few developments on the horizon, including the latest update on the EU AI Act negotiations. So based on what we're seeing and the conversations we're having with tech companies and investors, both at the asset owner and the PEVC levels, is that companies and investors that are starting to think ahead and preparing themselves for human rights due diligence requirements and more scrutiny, this is going to be a critical part of navigating material risks and maintaining ultimately more resilient portfolios with sustainable growth. So let's dig into the material risks in a little bit more detail on the next slide, Donica. Thank you. So I wanted to spend a little time walking through these and draw out some of the impacts they can have on investors, perhaps from a slightly different lens. As Stephanie mentioned, we also have seen that using the human rights terminology has not resonated as much as, say, we would like it to, being in the human rights space. But digging into these a little bit more, we do see an emergence and somewhat a convergence of risks, human rights risks and material risks that have implications for investors, as these categories are clearly and often related. And starting with sort of that shareholder LP risk bucket. As I mentioned, some of the Gen AI controversies will likely increase, and media and some LPs will continue to follow the money and may look to investors for better governance, more thorough due diligence and risk analysis, with an increased focus on responsible innovation. In addition, as AI is quickly becoming a modern day arms race, if you will, this could trigger questions about geopolitical risk, LPs coming from different countries with potentially very different and competing interests. So this all could lead to LPs from certain regions divesting from venture funds, or LPs requesting certain provisions or side letters focused on perceived or actual geopolitical risk, as well as an increase in resources needed, especially during the sourcing and due diligence phases. So, and that we'll see across these different risk categories. On litigation and legal risks, as I mentioned, we're already seeing this come to the fore related to intellectual property and copyrights, because AI models can be trained on copyrighted material and then can create similar outputs without necessarily attributing it. There's also the generation of deepfakes or computer-generated photorealistic images that can be produced without individual consent. So there are a number of issues that are starting to emerge related to the use of AI, and investors aren't immune. Lawsuits are already hitting portfolio companies, and they could eventually trigger up to investors. You see consumer backlash, demands for better governance, as well as increased resources and involvement on the legal and compliance side. So something to keep in mind on that litigation risk piece as well. Reputational risks, This is probably nothing new based on our conversations with investors as well as tech companies. They're likely to face increased scrutiny, as I mentioned. This is not slowing down, especially if AI products are viewed as causing social harm, anything from job displacement and union trade conflicts to disinformation and scams. So we're already seeing civil society following the money along with other shareholders and stakeholders. And this is going to be a common tactic from our perspective on various investments. So something also to keep in mind in navigating this complicated space. I already touched a bit on geopolitical risks. This could lead to litigation and regulatory complications for investors. I'll dive into that shortly on another slide, but I also wanted to connect that to regulatory risk. And as you all know, the regulatory environment around AI and Gen AI in particular is rapidly evolving. So this could then lead to regulations that restrict or forbid certain business models, uses, or applications, as we see with the EU AI Act, as well as increased scrutiny and expected disclosures for investors and portfolio companies. Overall, these become material risks as it increases the cost of doing business. This is anything from fines to increased compliance resources to product adaptation. So all things to keep in mind as investors that want to see their portfolios flourish in a more resilient and sustainable way. Next slide, please. So this is really just a visual to give a sense of the landscape here. And as we see, AI is becoming top of policy agendas for different governments and stakeholder groups across the globe. And this map is actually taken from the OECD's website, their AI Policy Observatory, which maintains a live repository of hundreds of AI policy initiatives across a number of countries. And as Valerie mentioned, we have a number of priorities and executive orders in the US, including on the development and use of AI, as well as restrictions on certain tech investments in China, the EU AI Act, as well as the EU Corporate Sustainability Due Diligence Directives, which would require companies to take appropriate measures in alignment with the UN guiding principles on business and human rights, as well as China's rules on the creation of deployment in Gen AI. Brazil and Canada are considering legislation, and the UK produced a white paper on AI regulation, including a number of principles from accountability to fairness, safety, and security. So the key takeaway here really is that there's no indication that regulatory trends are slowing, and this graphic doesn't even show emerging other types of human rights regulatory developments, such as the CSDDD, which I mentioned. So this is all pointing in the direction of increased scrutiny, increased regulatory risk, and other risks. So it becomes even more important for investors to develop the strategies and frameworks to address these developments and the other risks that I highlighted on the previous slide. And lastly, on this last slide, just to point out, complementing what Ben and Stephanie discussed about taking a human rights approach in line with the UNGPs, we work with a number of investors to help them identify in practice within their own approaches and strategies how they can adopt this approach, how they can fit it so that it's aligned with an ESG strategy or their other investment strategies, questionnaires, the due diligence and know your customer sorts of approaches that they're taking to ensure that human rights is embedded and considered, and if not using the term human rights, social impacts, social risks are considered as part of that decision making. And here are just a handful of examples of things that we have worked with investors on, and from everything from developing gating issues and exclusion lists to actually rolling out a due diligence process to capture human rights risks associated with AI, to discussing and strategizing a divestment strategy and a step-by-step approach for dealing with harms that may occur within their portfolio. So hope this has been helpful. Very much looking forward to the rest of the conversation.
Thank you so much, Kendra. And now we can hand it over to Johannes for the next panel.
Great. Yeah, thanks everyone for very insightful setting the scenes, knowledge sharing from various different parts of the globe and also parts of the ecosystem. I, together with Hannah, co-direct VentureESG. The organization does exactly what it says. We work with venture capital investors, not with ventures though, venture capital investors on ESG. And we work with about 500 plus funds worldwide and about 100 asset owners. We did a piece of work on human rights last year, and we don't track statistics. I don't believe so much in engagement numbers, given that our community is very small in the grand scheme of things. But I do believe very strongly that that was the one piece of work that we did that nobody cared about. And that was frustrating because we had a lot of interest. That's how I met Stephanie. We had a lot of interest from civil society organizations, and they are frustrated. The first Amnesty piece of work that I knew of for this ecosystem was very strongly attacking mostly American VCs for their non-existent DD around human rights. So I was very happy when Meredith and I connected, and we decided to take another shot at this, to hang it up a little higher, to get people from the policy area to come here and do exactly what just happened. But I do very, very strongly believe that the capital perspective matters tremendously. I research venture capital, and I'm writing a book called The Kingmakers for that exact reason. I'm very, very keen to shine a bigger light on the Kingmakers cast for this year, and we'll join a panel in a second, the VCs, rather than just the tech companies, right? None of the big tech companies, the kings, and there are very few queens, and I don't like to talk about the queen that's in the news the whole time because there are so many more kings who've done stuff wrong. From Zuckerberg to Bezos to the Apple guys who started all these big tech companies, right? And everyone only ever focuses on them, but they couldn't have existed without the VCs. They were all venture capital backed. And at least these big lots that we're now dealing with, 5 out of the 9 big ones were backed by one venture capital fund. So capital matters, and that's what we're going to discuss over the next 20 minutes or so. I'm joined by Castle from Atomico, which is, measures are hard, but one of Europe's most important VCs and one of Europe's biggest VCs. Anna from AP6, the Swedish state fund, and Peter from Stepstone. Again, measures are very hard, but from our understanding, the largest limited partner in venture capital funds in the world. And we're going to pick up the conversation from where it was left and talk a little bit about what are VCs and asset owners, LPs, doing, thinking about when it comes to human rights, specifically applied to AI. And my first question picks up from the frustration that I mentioned already is, why have VCs not really been doing anything, or at least been engaged on a conversational level, right? Diversity, nobody has been doing anything, but at least everyone has been talking about it for a long time. Why is this not the case for human rights? And what kind of is missing? And perhaps starting with Anna and then also hearing from Cassid on the VC perspective.
Sure, I'll give it a shot. Hi everyone, it's really nice to be here, and thank you so much for this initiative. It's really useful with this multi-stakeholder approach, and I took away so much from the previous speakers. But on your question, Johannes, difficult. but just kind of backing a little bit, like I think Stephanie referred to very early stage companies being sometimes just an idea or maybe just people, and being very, very small and very limited. So from our perspective, so I'm not sure everyone knows of us, but we're a state-owned pension fund. We invest only in private equity through buyout, growth, and venture, and we have around $6.5 billion under management as per end of last year, and around 14% of that was in venture, and it's indirect investments in venture capital funds. So when we look at venture, I mean, we have this perspective, we speak to venture capital firms, they're in different stages, and sometimes it's very, very early, and there's been this this idea that thinking about social and environmental impact is something that we can deal with later, because now we just need to get this up and running, and we just need to solve this thing, and we just need to pay these first 3 employees. But even if that has been so historically, and maybe it's the case with some firms as well, at least what we see is that it's changing, and that it's becoming more of a norm to look at these issues, be it environmental issues or social issues, even earlier, because you can find a simple approach, kind of simple and relevant approach early, and you can build on that rather than just running ahead and then trying to change everything once you understand the consequences of these negative impacts when you scale. So we can see different drivers of that change, but I think you're totally correct, Johannes, that that's not the case everywhere. And maybe some of the other panelists would have a view on why that is.
Sure. Maybe I'll just continue the theme as well, and maybe I'll just caveat by saying I'm going to speak in slightly broad brushstrokes, and this does apply to all VC funds, and certainly I see some VC friends on the line who it definitely doesn't apply to, but the fact that they're on the line is probably indicative of the fact that they are the outliers. So from my perspective, I think there are really 3 reasons why there has been a general lack of engagement. I think it comes down to lack of understanding, lack of attention, and a general lack of expertise that's available. So maybe taking those in turn. So I think in terms of lack of understanding, I think, although the laws and regulations and international standards are super clear and well established, there is unfortunately still a distinct lack of understanding and knowledge and appetite on the part of many VCs, and especially in Europe, and that's unfortunate. I think a lot of that is also driven by the fact that there is a lack of attention on human rights in particular, because there are so many competing demands, especially on the ESG side, on asset managers. And if you look at Europe, you have SFDR, you have CSRD, TCFD, general ABC compliance. All of those things are overlapping and oftentimes competing. And one of the things we've seen in the industry is that there is a trend towards cherry picking bits of compliance that's maybe slightly easier and more comfortable and easily understood by a lot of asset managers. And that tends to be around the environmental side, the governance side, and that comes at the expense of the more complex and nuanced side of human rights. And I think that trend is changing, but that's certainly something that we've noticed as we've talked to a lot of other asset managers as well. And then lastly, I think that all of these first 2 issues have been compounded by a lack of expertise, especially on the in-house side for a lot of asset managers. And that's just creating a bottleneck in terms of the ability to integrate human rights correctly into due diligence and investment processes. So I think those, for me, are the 3 main factors that's really driven a lack of engagement in the sector.
Yeah, fantastic. And as the UN team has talked about, the lack of tools contributes to that on top of everything, right? Even if I have somebody who's switched on and who knows that they want to do something, how to get started is still not 100% clear. Peter, to bring you into the conversation, from an LP perspective, why do human rights matters in your VC work, especially when it comes to AI? Or to put this slightly differently, is AI potentially a good starting point to have a conversation about human rights in particular? And how could that look like? How does that look like in the funds that you work with? And perhaps Anna can jump in afterwards as well.
Yeah, sure, thanks. I mean, actually, just going very, very briefly, because I know we're pushed for time, but going back to that first question as well, I think there's a couple of other things to think about, just given, you know, how nascent ESG is in the first place in venture. That's the reason you're here. That's the reason, you know, why, you know, kind of you set up. So when we look at in the buyout space, I wouldn't say, and it's always hard to generalize, right? But I would not say human rights is always particularly well dealt with in the buyout space yet. So yes, venture, when you look at certain metrics, when you look at the amnesty reports and stuff, is still well behind, but it's not the only asset class, I don't think. So yeah, sorry. So why do we care as an LP? I mean, a lot of these things have already kind of been said earlier in the session. Really, it's clear that investments in AI can have all sorts of risks to LPs and the GPs too, right? There's clear links, as we've established, between a number of AI kind of models, different type kind of business models and use cases with AI and human rights. Certainly lots of ramifications there. And we care, you know, the bottom line is we care about human rights, and that's why we care there. But of course, you know, those are also investment risks. You know, I know predominantly we should be thinking about human rights risks in the eyes of the rights holders themselves, which I think most investors try to, but you can't get away, especially in the sort of, you know, the sort of age of the pushback on ESG, of linking this and other risks to, you know, risk and return. So there's clearly risks there. If you think about some of these, you know, technologies that are potentially going to be, you know, fall foul of the EU AI Act, for example, I'm not sure how many of those are really investable anyway. I know, you know, a lot of the sort of unacceptable things within the latest draft of that act are stuff like, you know, predictive policing and some sort of fairly, you know, way out there technologies. Well, they're not way out there, but whether many people will be looking to invest in those in the first place, I don't know. Reputation risk, you know, the whole gamut, really. And sorry, Johannes, what was the second part of your question? Why do we care? And
what do you do?
What do we do? Yeah, that's the $1 million question, really. So look, I think just to give a bit of an indication of how we, you know, address due diligence in the first place and around human rights. So I mean, so Johannes mentioned we're apparently the largest LP in VC. That I don't know about, but we do have $650 billion across the private markets under advice or management. But for every single investment we make, whether it's a primary, secondary, a direct, so, you know, into GPs, into underlying portfolio companies as co-invests, there's always RI due diligence that takes place, and that's mostly embedded with the investment teams. So the investment teams that should really understand the risks of the kind of things they're investing in, so they're best placed to actually do that. With human rights, you know, we've got a couple of examples where, I don't know whether you want an example. It's a non-AI example. Unfortunately, we don't yet have AI examples of where we've looked at investments and have not done them because of certain risks, whether they are human rights related or not. But, you know, given we do that kind of upfront due diligence, there are times where we will not invest because of human rights risks. This one, I'm afraid, is pretty much as far away from AI as you can get, really. But it's kind of an example of how it works. So, you know, we looked at an agriculture kind of farming business in Asia. The way we got to understand it better, this was a co-investment, so there's always a lead GP kind of in between us and the underlying asset. But we worked with that GP and the underlying company. We do you know, desk research, we do third-party ESG kind of due diligence. We'll do kind of reference checks, etc. There, we picked up a bunch of social issues, you know, gender-based type things that were kind of happening at the plantations and all sorts of things. And it was just one of those things where if we can get comfortable with a way of mitigating the risks, or a way of engaging with companies post-investment, or the GPs post-investment, and kind of working towards mitigating those risks, we may still invest, but in this case, we didn't. So I'm sure there will be in the future instances where that kind of exclusion comes into play with tech and AI.
Great. Yeah, Anna, do you want to jump in here? Otherwise, we'll get.
Sure, I can jump in on the why and the how. The why is really obvious for us. So human rights has been like a core pillar of our responsible investment approach since inception, when we started to formalize our approach like 10 years ago. But a couple of years ago, we started to realize that social sustainability and specifically human rights was not getting the attention in our approach that it should. And coming back to, I can't remember someone saying just this, that was you, Kazit, around competing interests, right? So we were realizing this, and we were thinking that we wanted to do something about it. And like our understanding at the time was really that that human rights within the context where we invested, it was largely kind of dealt with in terms of focusing on supply chain issues in emerging economies. That was where the focus was. And at the same time, we were seeing, like in our portfolio and in the industry, things that wasn't about supply chain, but was more about product use, for example. So we were seeing examples of, I mean, these are just like kind of anecdotal examples, but situations where democratic rights were being infringed because of the use of a particular software that was sold by a company that was owned by a manager that we were looking to invest in, etc. We also saw some things related to surveillance tech and kind of targeting of activists, etc. So whilst we were seeing that managers were most kind of referring to supply chains, we were still seeing things happening in the product use phase. So first we just reacted on that, and we kind of brought this up in discussions, but more kind of on a case-by-case basis. But then we were thinking that we should really do something systematic about this. We should try to understand what our managers, how are they diligencing human rights. So this year we've piloted a human rights assessment that is building upon the UNGPs, but kind of tailored to a indirect investor in private assets, and where we've been speaking to managers that manage our assets around what they do in terms of human rights due diligence before investing and then after investing. And it's not like AI specific, it's just across everything really, and it works well in buyout and it works well in venture as well. And it brings up these examples, both of kind of adverse impacts, but also examples of how you can identify and how you can deal with these types of situations. But to your question on if AI can kind of spur more interest and focus on these issues, I think yes, just because of the fact that, I mean, it's very recent, it's an exponential development, but there are already so many risks, and we've been hearing a lot about different types of risks from the previous speakers, already so many things that you need to be thinking about as a company or as an investor. So in a way, yes, I do think and I do hope that the focus does increase with this conversation.
Yeah, Hannes, can I just quickly add to that? Because I agree with you, Anna, and I think I think it's an interesting one with AI. Does that actually kind of help the overall ESG sort of cause of getting more ESG integration? But I definitely sense there's a lot of, I'm trying to think exactly how you sort of describe it. It's like sort of pessimism avoidance or pessimism aversion out there. So given, all the good things that VC investors think and that AI can do and achieve, there's just a real sort of reticence to look at the other side of the equation at the moment. There's sort of hyper focus on the upside and the financial opportunity and all the good things that it can do. At least that's what I'm kind of, again, it's super difficult to generalize, but that's what I'm coming across.
Yeah, I hope there's some learnings from, and not everyone had their fingers in that, obviously, but some of the big names did, from what happened in crypto, right? Very similar. Everyone needs to now put money into crypto, and most of that money is lost. Kasset, from a perspective of a VC, can you share an example of where human rights turns up with or without AI?
Yeah, sure. Happy to. I from my perspective, the really interesting thing about human rights due diligence, especially for early stage investing, is that it can be both incredibly simple and unbelievably complex at the same time. It's incredibly simple from the perspective that if you have a checklist that says, do you have AI ethics policy? Do you have this and that? Most of the time it's just no, no, no. Super quick. But then it's incredibly complex if you want to do it well, because you have to take founders on this journey to really understand how they might identify both contributions and abuses that are directly linked to their investment activities. So I think, one example we have from the last 12 months is we invested into a Swedish fintech that's using AI and machine learning to essentially automate and create greater efficiencies for financial institutions doing KYC checks, compliance monitoring, general regulatory monitoring. And the really interesting thing for us is that, on the face of it, this company is great. It's essentially fighting financial crime, right? So super simple. It's straightforward in terms of a diligence perspective. But what we found really interesting is when we sat down with the founders and we asked them, hey, tell us about, the human rights dimension of your operations in your business. Have you thought about AI ethics? Have you thought about explainable AI? Have you thought about the potential for your technology to inhibit access to financial products? The answer is no, right? And like the thing that we do as part of our due diligence is we do two things. So we do the checklist, which everybody does, but we also do something called conscious scaling, which is where we sit down with the founders and we essentially say to them, okay, let's imagine you hit all of your KPIs for the next 10 years. You become the product that is everywhere in all of the financial institutions you want to get into. What happens if your data modeling and your data set's incorrect, or it leads to discrimination, or it leads to certain passport holders being unable to access financial products? What happens then? And it's that kind of journey that you take the founders on as part of the DD process that helps galvanize that interest and engagement with human rights. And then as a result of that, what we then did was we brought in experts to try and help them craft the AI ethics policies that they need to put in place, and also just to think about how they need to rethink some of the data sets that they're using and how they're training the model. But all that starts with that sort of initial conversation at the DD stage.
Fantastic. Yeah. And from a general perspective, the complexity is welcome, right? I fully agree with what you say, right? You can do this very easily, and we spend a lot of time making sure that people don't, because the checklist approach doesn't do anything. There's no business case for that. So with the reporting focus, I have a similar feeling. I always say it doesn't really make you more healthy if you measure your blood pressure. That's not going to do anything for you. And it's similar here, right? Does this company have or doesn't have a policy? Is that actually going to affect how they act, right? And how you get to that is, in a sense, again, an art, not a science, and working with the companies on that similarly. So to kind of end this panel, and I think we'll take a couple of minutes afterwards for questions with one future pointing impulse. To begin with, for the LPs, and Kasset, you've in a sense already pointed a picture for what you're doing here as a VC, but please do add to this. Anna and Peter, what would you like to see? Where do you think, again, coming back to the very first question that I posed to you, what would you like to see more of when it comes to human rights integration? What do you think we need more of? And how do you imagine this is going to look when we have a very similar conversation again in 2 years or so? What are the examples going to show? How are people taking this more seriously going forward? And then perhaps cast it to end. And if you have questions in the community here, drop them in the chat. I think it would be good to have 2 or 3 of your queries answered as well. But perhaps Anna to start.
Okay, sure. So that was a very long question, Johannes, but I'll try to start on some of the questions. So we'll see where it ends up. So maybe just starting on a positive note. So technology, AI could make our society more equal, more sustainable, more resilient, it can be a force for good, and lots of technologies are creating very positive outcomes. But then you have all these risks that we've been talking about. So I guess what we would like to see, well, obviously I'll take the LP perspective. So as an LP, we would like the managers that we invest with to really understand the potential impacts of various business models in the verticals where they spend their time and invest our money, or the Swedish pensioners' money, and to identify where such impacts can occur, and to help founders and companies to mitigate such impacts, not just before investing, but throughout the period of the investment. And I think to reach that point where everyone does this on the founder level, on the company level, on the VC level, and on the LP level, I mean, that's when we get that force for good, when everyone is doing this, right? But in order to get that, we need more of what we're doing right now. Actually, we need more of multi-stakeholder initiatives and discussions where we speak about the impacts, but what we can do about them, and what tools exist. There are great tools. I mean, just starting with the UNGPs, you don't. I mean, you can just start there. And you can even start with the UN Declaration on Human Rights. But then, of course, you need more tailored tools. And we've heard about some of existing tools, some upcoming tools, but you also need to get people to use them. So this is a great opportunity, but it's a limited setting, right? So if we can multiply this, and I think as well, maybe maybe connect civil society even more with type of industry organizations, investor industry organizations. That could be one way forward as well. I don't know. I tried to answer some of your questions, but I'll stop there.
Thanks, Anna. I'm just striking out from my list the things that you've already hit upon. But I mean, going back to Kazit's example, I mean, I'm quite a fan of trying to integrate some more forward-looking kind of risk assessments in our diligence process. So I've, the conscious scaling at Atomico sort of came on to my radar when I was at the PRI, and sort of trying to get the PRI kicking off stuff around venture and ESG. And I think that gets people over the hurdle of what Anna brought up earlier, is that, people don't necessarily see this as relevant at an early stage of their company's development. So, get them to think, if everything goes absolutely to plan, and, they are those kings or the few queens, as kind of Johanna's put it, then, what then? What are the impacts going to look like then? So I think that's really useful, personally. On the policy front, I do take the point of Johanna's, but I think we'd still like to see more people adopting a policy just as a foundation, at least. It doesn't mean it's been implemented well, and you need more than a piece of paper. But around, I think it's about half of the VCs that we invest in now do have ESG policies, but we'd like to see more of those with, you know, specific reference to human rights, for example, within those policies, and just broader policy adoption, full stop. We're still getting VC GPs kind of saying to us, no, we're probably not going to adopt an ESG policy because that's still just a sort of small proportion of the market. But, you know, as I said, they are kind of getting into the smaller proportion of the market by not having one pretty rapidly. Some more policy. And then I think, like, getting into the nitty-gritty a little bit, I think it'd be interesting, you know, so Stepstone doesn't have an exclusion list as such. Some of our clients do, which we help them implement. We have sensitive sectors where we do kind of more in-depth due diligence, for example. But we, you know, the exclusion lists that people do have, I think, are just not fit for purpose in terms of AI at all. It's, you know, so I think we need to see some more like super specific exclusion lists, and probably regulation might start to kind of do that for us, maybe. But that could be interesting. And then maybe something like, you know, a lot of us probably use SASB in terms of trying to identify like what the material sort of risks are across different industries and things. Maybe, you know, we could do with a tool that sort of specifically looks at each small part of the AI industry and like a heat map of where the sort of worst human rights risks lie, perhaps, to help people kind of do initial sort of triages on portfolios and things. So I think there's some like practical things, but also, you know, just generally speaking, I think we just need more openness from, and again, I'm generalizing, and it's, as it said, this probably doesn't apply to most of the VCs on here, but you know, in general, we need more openness and willingness for VCs to engage with LPs on some of these issues, so that, you know, we can discuss the mitigants and things. I think just more focus, as Anna said, on the risks of these investments, and specifically human rights risks, because there's a lot of focus on the upside. But just given this general sort of, you know, narrow path we seem to be treading between, you know, AI being a force for good or vice versa, I think we just need a bit more focus on understanding and mitigating the risks from everyone involved, really.
Maybe I'll end in 2 points. So I think, you know, what for VCs, I think one of the biggest agents for change is going to be demands from the LP side, and we're starting to see more and more of that, which is fantastic. I mean, I went to an LP event a couple of months ago with an LP on the call, and basically the message to the asset managers in the room was there is no such thing as an asset manager who's insulated from human rights abusers, regardless of what asset class or size you are. And that really resonated. So I think that's fantastic, and I think you'll see more of that. And again, one of the things that you're seeing from that, though, is that you are seeing a maturity in terms of like the VC and PE industries. So when I started on the PE and VC side 6 years ago, there was maybe 3 or 4 houses that had ESG policies. Now, you know, over 50% has them. And what's really exciting is in the last 12 to 18 months, we've now seen a number of asset managers actually have specific human rights policies come into place. So BlackRock, Moulton, we're working on our own. So I think the trend is really going in the right direction. And I think you'll see more and more of this as well over the next couple of years.
That's the hopeful note I wanted this panel to end on. And again, I think the focus that I want to make clear again, and why we spend increasing amount of time, our time with LPs, is LPs have power. Sometimes the LPs are saying, oh, we mustn't ask too many things from our poor managers, then they don't let us in anymore. That's true sometimes. But yeah, thanks a lot for the panel. We do have one question here in the chat. Responsible exit, what to do when something happens, so to speak. Does anyone want to address this quickly? While you get your thoughts together, there's a whole piece of area of research that looks at this in the fossil fuel industry. And actually, to a certain extent, counterintuitive understanding is it might actually be the responsibility of some of the biggest asset owners to continue owning some of the fossil fuel companies and use the power, say the Norwegian Sovereign Wealth Fund, that they have by owning 2% of Shell to say, you have to change what you're doing here. rather than divesting, especially if you're a progressive asset owner, and turn your head away, and then Shell could do whatever they want to do without any kind of active stewardship. So stewardship versus divestment, but what does the panel have to say?
That's where I was going to go. Johanna's kind of looking at the sort of research in public markets, which, you know, I don't think divestment necessarily works too well. Then throw on top sort of liquidity issues, you know, can you actually exit when you wanted to, and all the rest of it in PE and VC. I think, you know, given, you know, especially if you're a control owner, you know, the responsible thing might, whatever it is, I'm not sure just walking away from the deal is the right thing necessarily, but it might be times. I don't know. It's a tough one, isn't it? I mean, it might be kind of. I've never heard of a PE or a VC fund doing that.
We have a couple of funds in the group who do this when sexual harassment cases are surfaced, which I would call an ESG incident, but not when it comes to a human rights incident. Good. We'll have, by the way, everyone, a little bit more time towards the end in the last 15 minutes or so to resurface some of the questions you might have, but handing back to Meredith to take us into the next section.
Thanks, Johannes. That was a really fantastic discussion, and I really appreciate what Anna said about how the why pay attention to human rights is obvious. And, you know, if you ask me what I hope we see in 2 years' time, it's that we see more coordinated action amongst LPs in order to come together and have kind of coordinated requirements for what they're looking for when investing in VC. So we kind of raise the bar together, and hopefully we can come up with some ideas on how civil society can help with this. So we know we've been talking about human rights due diligence, and of course in practice this is going to look different for different types of investors, you know, from venture capital firms to the limited partners investing in them, or commercial banks. But throughout the variety of its forms, something that needs to take place is a meaningful stakeholder engagement. And we want to highlight with the next presentation from Natalia from Access Now about how really engaging with civil society is a mutually beneficial exercise. So I'll hand it over to her first, and then we'll hear from Marlena from ECNL, and then we can kind of open up our discussion.
Great. Thanks so much. Can you hear me? No? Okay, great. Hi, everyone. Yeah, I'm going to talk today about tech accountability and investor engagement and based on a case study from Francisco Partners and their 2 companies from their portfolio, which is Sandvine and NSO Group. We can start with first slide. I don't know if I guess I don't have control over slides. Yeah. So yes, so this is just to start us. I don't know if you've seen this. 2 days ago, we had an International Human Rights Day, and we've seen that NSO Group has tweeted about their wonderful compliance with human rights UNGPs and how they're committed to work diligently to ensure human rights compliance. And I think it elicited a lot of chuckles, and smirks from us, civil society, human rights organizations, but also I'm sure those familiar with NSO's behavior, which is completely contrary to this statement. But I think it illustrates how companies are often happy to use any opportunity to demonstrate both to the public, but also, of course, to their investors, that they are in fact complying with human rights, and how I think we would recommend not to fall for this kind of empty statements, and that they look at the actual track record of the behavior. So we can go to the next slide. Yeah, so of course, you could do the previous one, sorry, I skipped over. Just to say, Yes, this one. So this is just to say that, of course, like unless you've been living under the rock, which hopefully you weren't, you are aware of the various abusive and scandals and abuses that NSO Group has been involved in. There is no lack of basically now every region in the world has had its share of stories about NSO's technology, Pegasus facilitating human rights abuses. It has resulted in a lot of, there's lawsuits, there is financial losses and a lot of issues. So, and Access Now has been involved in some of these investigations, like El Salvador, Armenia, hacking of a prominent Russian journalist, but also many others that our partners as well have reported on. So just to say like a contrast to that tweet and the various, the actual track record of the company. But we can go to the next slide. But just to say that it didn't all happen yesterday or even a year or 2 or 3 years ago. We know that at least since 2016, NSO Group has been involved in human rights violations or facilitating human rights violations, at least since 2016, which was the case of Ahmed Mansour, who is a UAE advocate, activist who's still in jail. He was hacked with NSO's technologies and technology. And then there's been also reporting in Mexico and other countries in 2018, which has prompted Access Now and other organizations to write to NSO's investor about these abuses. But I'll come back to that. Let's go to the next slide. So again, we know about NSO, but there's another company, Sandvine, which similarly has been involved in abuses at least since 2018, when Citizen Lab has reported on its involvement in deploying, helping government of Turkey and Egypt and Syria potentially to redirect users to links that either would infect the people's devices with spyware or would target them with very questionable content and ads. This is an example of the device that Sandvine, which is a US-Canadian company, that they are producing that has been implicated in delivering of this malicious technology. And again, the countries are Turkey, Egypt, and Syria. We can go to the next slide. And of course, then we probably heard that Sandvine has also been involved in a major scandal in 2020 when Belarusian government shut down the internet.
Did we lose Natalia? Okay.
She is coming right back. She's just in the waiting room.
Apologies.
She's back.
Computer died, but I'm back. Yes, so when you hear me well?
Yeah.
Okay, great. So when the Belarusian government shut down internet in the midst of the massive protests in Belarus in response to the rigged elections, and Sandvine's technology has been implicated in this, in providing basically their tools that help the government to shut down the internet. There was a massive outcry in response to this by Access Now, but also Belarusian activists, diaspora, US officials, and Sandvine at first said that they didn't understand what was the problem, that the internet wasn't part of human rights, and that they are not responsible, but ultimately they had to back out and end their contract with Belarus. But unfortunately, the damage was already done, and their technology helped to suppress human rights and cover torture and horrific abuses by the Belarusian regime, which is currently ongoing, unfortunately. We can go to the next slide. But Belarus, Egypt, Turkey are not the only countries where Sandvine has been implicated. We have, again, based on reporting by Bloomberg and others, we have seen from Algeria to Uzbekistan to Azerbaijan to Russia, we have seen that Sandvine has been quietly providing services to all kinds of repressive regimes. And even in the case of Russia, we learned after the full-scale invasion of Ukraine that Sandvine then quietly exited Russian market. But again, as with the case of Belarus, like they didn't learn their lesson, and despite what happened there, they have up until the full-scale invasion, they have been facilitating Russian repression and censorship and surveillance with their technologies. Next slide. And then most recently, just a couple of months ago, we have learned that Sandvine technology has also been used in Egypt to deliver spyware, which is a predator spyware made by Cytrox to Egyptian presidential candidate. So their tool again has been implicated not only in censorship and shutdowns, but also in delivery of dangerous spyware technologies. So we can go to next slide. So what do they have in common, NSO and Sandvine? Of course, they both have been part of the portfolio of the Francisco Partners company. They are primarily specializing in technology services. They're US based. They have offices also in London, New York. But they have been smack in the middle of all of these scandals, and they have been called out by various, by us and other activists, and with questions about what kind of due diligence they have conducted before investing in these companies, and also in relation to various deals that they have they were trying to initiate. So we can go to the next slide. Yeah, so this is something that we have, again, at least since 2018, Access Now, Citizen Lab, other organizations have been writing to, in response to all of these scandals that I just talked about. We have been writing to them and asking them to also ask questions to the companies like Sandvine and NSO in terms of what is happening, what are they doing in terms of their practices, in terms of the due diligence, the contracts that they are initiating with repressive regimes with long track record of severe human rights abuses. And unfortunately, Francisco Partners have not been responding to our requests. They have been ignoring. However, as a result of our outcry, but also again by various actors and public pressure, because of this, they have one of their deals actually to sell NSO Group to Blackstone Group has actually failed as a result of this, and that was a big, I understand, a loss, and the NSO actually had to buy back the shares of the company from Francisco Partners. That is, I think, a lesson learned in terms of like the price of ignoring the civil society and the various signs that their companies in their portfolio are not behaving in accordance with human rights, and just failure to basically engage with civil society on these issues. Next slide. But again, with NSO, you would think that they learned the lesson, but unfortunately with Sandvine, we know that they're still continuing working with them, and Sandvine scandals are ongoing, and there's another reporting by Bloomberg that they were also implicated in another questionable technology, this time meant for the US. But as you can see in the quotes, and Vine continues denying, even though they don't outright deny that their technology was used, but they're saying that it's not meant to be used to deliver spyware. But they're not explaining the fact that they have been, again, dealing with countries like governments like Egypt, who have long track record of human rights abuses, and they're not responding in terms of explaining what kind of due diligence they have performed before working, and what were the results of that exercise in terms of, like, how would they continuing working with this regime that continues to exploit and misuse their technology. So just to sum it up, the last slide, I think, that we have, in the words of John Scott Railton, the Citizen Lab senior researcher, that senior serious investors who have done their due diligence maybe or should be thinking twice, really, about just how problematic this category of investments, which is surveillance, like companies that provide surveillance, spyware, censorship technologies, and what this could be doing to their image and their bottom line. So this is, I hope that is an interesting case study to see, like a real world example of really failure to take human rights into consideration by an investment company. Thank you.
Thanks so much, Natalia. And I think a lot of us on this call know that given all of the human rights related risks that was tied to Pegasus and NSO Group, it eventually just became a company that no investor wanted to touch. And that too has a really powerful ripple effect when we look at, well, what are the next types of companies, including the AI affiliated companies, that are going to be similarly impacted in investment portfolios, and how that will evolve. And we'll post in the chat just now. I know that's something that has come up multiple times, is the fact that we're still missing kind of guidelines and tools and resources in order to help private capital investors do this. There are a number of them that do exist that can and maybe need to be adapted a little bit more for this specific audience of VCs. But the Resource Center, along with Heartland and Access Now and a number of other groups, last year published a surveillance technology guide for investors, which lists a number of questions and red flags to look out for when investing in companies that are tied to surveillance tech and spyware. And it was mentioned on the last panel, I think Peter said that, talking about evolving exclusionary screens, there is a movement around this in relation to spyware. So this is also something that we can pick up in the discussion later. And talking about resources that do exist, we'll pass it over now to Marlena, who can talk about the meaningful stakeholder engagement toolkit, specifically for artificial intelligence and developing AI, that ECNL has been working on. And not only working on, but also putting it into practice. And she can also put us into more of a context of how this applies now, given the latest political agreements concerning the EU AI Act, and how stakeholder engagement fits into this fundamental impact assessment that's going to be required soon by law in the EU. So over to you, Marlena.
Yeah, hi everyone. Can you hear me? Yes, great. Okay. Hi, it's great to see and meet you all. I'm Marlena Wisniak. I lead AI and emerging tech at ECNL. ECNL is a civic space and human rights organization headquartered in Europe, but we do global work. I'm based in San Francisco, so calling you from California right now. And what we look at is how emerging tech, especially AI, impacts human rights, with an emphasis on marginalized groups and civil society actors. So a lot of it is human rights defenders, activists, grassroots organizations, and civic space generally. We look at multiple angles. So we're mostly lawyers. We do a lot of policy advocacy. So Meredith mentioned the EU AI Act, where my colleague, who is based in Europe, has been actively involved over the past 3 to 4 years. So she hasn't slept much last week, as adopted on Friday. But we're also involved in global processes like the UN, where one of the core observing parties together with Access now at Council of Europe Convention on AI. And to some extent also involved in national regulation, like the US, for example. So we welcomed the EU interest with the AI. So that's on the policy front. And then linking it back to to the private sector, including investors, a lot of the requirements in these regulations and the enforcement thereof really are for the private sector. So specifically AI developers and deployers. And we found, as we've talked a lot about today, that there really is a disconnect between how tech is developed, how investors invest in tech development, and what civil society needs. So when we talk about opportunities, civil society is of course dependent and reliant on technology. We couldn't have this call today without tech. And yet, usually tech, including AI, is not designed for civil society and marginalized groups. So against that backdrop, ECNL over the past 20 years actually has been advocating for meaningful stakeholder engagement. And as these conversations have really, I'd say, sped up in the past couple of years, we found that meaningful engagement has become a buzzword, and we wanted to unpack that and look what meaningful engagement looks like for ethically. So we didn't look at investors in particular, but we looked at AI developers and deployers, and what would it look like to meaningfully engage civil society and external stakeholders. So over the past 2 years, we've consulted with over 200 people at this point, from different sectors: civil society, academia, private sector, government as well, on what it would look like to engage stakeholders in AI development and how that could be included in the human rights impact assessment process. A couple of questions we looked at is, why should stakeholder engagement take place? And I'll skip that because we've done a lot of that talking today. And zoom in a little bit more on what is meaningful and what is meaningless. And so we crowdsourced many different opinions. A lot of it, especially from the civil society side, as you can imagine, is frustration around kind of like stakeholder washing, doing participation in the name of, we did it, we checked the box, but it didn't actually have any influence. And also frustration on the side of private sector, where they don't really know what to do, how to do it. It takes time, especially in the AI lifecycle, where things move very quickly. So like I said, I mentioned in San Francisco, kind of the belly of the beast in terms of tech development and investment. And so really, how does this fit into the AI lifecycle? And so the framework that we put together based on all these consultations, and it's still a blueprint at this point, we are going to revise it based on the pilots that I'll tell you about, is looking at stakeholder engagement for AI specifically. And so I posted that in the chat. So very quickly, and I will then pause there and for like questions. The 3 key elements that we found is there should be a shared purpose. So the AI developer, deployer, and the people engaged should to some extent have aligned interests. There should be a trustworthy process that includes the engagement should be inclusive, open, fair, respectful. We have a bunch of criteria. And finally, visible impact. So oftentimes there's an engagement and there's no follow-up loop. Those who are engaged in the process didn't really understand if and where and at all, whether at all their engagement was meaningful. So how does this look for investors and what is happening today in practice? We are piloting it with the city of Amsterdam. So they're developing a service for detecting relevant objects or situations using emotion recognition in the public space. It seems like a pretty benign application. It's mostly using computer vision and image recognition for trash collection. However, as we all know, or as we have seen through civil society reports, the use of any type of facial recognition or image recognition in the public space can lead to severe surveillance. So we're really working with them on including citizens and civil society into determining how to build and deploy this system, including whether it's helpful at all, whether it should be deployed, whether funds should be allocated differently. And then in parallel with the private sector, we're about to launch a pilot with a San Francisco-based social media company. So that should be announced this week. And we are looking specifically at how the safety machine learning team can build models and integrate LLMs, so large language models, into content flagging, user education, moderation. So we'll be helping them map stakeholders, include them as they build these LLMs for the purpose of content moderation, automated content moderation, and whether and how to deploy it. So that's a couple like real world examples of how this framework is being implemented. And based on those pilots and learnings, we will revise the framework next year. Really happy to include any folks in this virtual room if you're interested. We also led last month in November a roundtable in Palo Alto with VCs and startup accelerators to discuss how the framework could be implemented by investors. Like I mentioned, it's not meant for investors, it's mostly for AI tech and developers. However, as we've heard today, investors do play a critical role in shaping the direction of a company. And so when we discussed even like lean startups or very early stage startups with little funding, not all of them are unicorns. It's often 1 or 2 or 3 founders who just need to like have enough money to survive and not have their company fail. And in an environment where it's still very much a move fast or die situation, where does stakeholder engagement fit in? And one of the key, I'd say like agreements with everyone is that just from a purely business perspective, beyond the legal and financial and reputational risks, stakeholder engagement can, to some extent, be free user experience or advice. If you only have 1 or 2 members in your team, you don't have a lot of staff. And even though like you should properly resource stakeholder engagement, it is a very low cost sourcing of ideas that can really help investors and VCs and tech developers shape a business plan that is viable, that is profitable, and that is rights-based, without violating human rights. So I will pause there. I shared the link to the framework in the chat. I'm available at marlena@ecnl.org. I'll post my email, contact if anyone's interested. And yeah, I'll stop there. And thanks so much for having me, Mayor.
Thanks so much, Marlena. And I'm going to now just quickly run through one more resource, which is the Business and Human Rights Resource Center, aptly named, although a very long name for an NGO. Just to say that we are monitoring the allegations of societal and environmental impacts linked to over 10,000 companies worldwide in over 10 languages as a means of promoting corporate accountability and transparency. And we aren't just looking at the big tech companies, we're also looking at medium-sized and smaller ones, including startups. And what we do is we monitor the media and also receive reports and allegations coming from our partner organizations in order to feed these into our company dashboard pages. So you're looking at an example of the company dashboards there, which kind of tracks the concerns over time and also company response requests, because we reach out to companies and sometimes investors in order to have responses as to what kind of actions they're taking related to those allegations. And we can move to the next slide. And the tech team is relatively young, so to speak, within the research center itself. The NGO has been around for over 20 years, but over the past 5 years, the tech team has logged over 425 different data points related to artificial intelligence and human rights concerns. You can go to the next slide. And in reviewing those data points, these were some of the most salient risks. So if you're looking at a specific startup company, you can check in the database, see if it's there. You can see related startup companies and see what type of salient human rights risks were linked to them. We won't get too much into this now since we don't have a lot of time, but we can go to the next slide. And we're also conducting some research that we started earlier this year to better understand what is the current state of play between investors and digital rights groups in order to better understand the salient human rights risks linked to their portfolios or the types of technologies that they are investing in, whether they're closer, as a venture capital firm or a limited partner firm a little bit further up the chain. And we engaged with, through interviews and surveys, 33 different civil society organizations working on digital rights around the world, including groups from Albania, Myanmar, Peru, India, Nigeria, Palestine, and others. And these were the main challenges that we found. And so these were the challenges I was referencing back at the beginning about how, the investors say that there's data gaps and information gaps and they need more tools. And civil society is also saying, well, we're having trouble reaching you. There are barriers to access and communication. We need joint capacity building and sharing of resources. We need more transparency. We need to address the imbalance of power. So there's a piece that we're going to publish next year, which outlines this more in detail. But I just wanted to kind of kick off our conversation this way for the last 10 minutes that we have together. And thank you again for everyone who is still on the call. What we want to do is look at these key questions on the next slide, which is, how can we as civil society work more closely with the limited partners who have a human rights focus and with the venture capital firms that have a human rights desire to improve the behavior of the startups that they're investing in? What should stakeholder engagement ideally look like? And Marlena also, referenced that she has been doing some engagement with VCs to figure this out, and I know BTech has as well. And how can we take some of the lessons from everything that we've heard thus far and brainstorm ideas for more effectively moving forward into the new year, so that we really have some tangible change in 2 years, as Johannes posed for our questions to look back on. So with these, I'll post these questions into the chat, and everyone can feel free to turn on your cameras, turn on your mics, and we just have the last kind of 9 minutes here to share reflections, thoughts, and ideas for moving forward together.
I was trying to raise my hand, but I couldn't figure it out. Is it okay to just speak? Okay.
Yes, feel free. Thanks, Mallory.
I'm Mallory. I work with Heartland. And in addition to on-the-ground reporting of harms at Heartland, we've seen how civil society organizations can also provide valuable resources to investors regarding the developing legal and regulatory risks. And we think this is particularly true of all the technologies we've talked about today. As we've heard, the regulations are still developing, and we've seen international law. We're still figuring out how it's going to be applied. So I think in this sense, civil society organizations play a super important role in showing the impact materiality of how things are happening on the ground, but also that other side of the double materiality argument about how some of this technology is going to be fundamentally incompatible with international law in order to help formulate that argument. So I think moving forward, that's going to be really important, specifically with these emerging technologies.
Yep. I'm very happy that we had at least 5-6 LPs in the room. I think not only is, and I've had these conversations with many here on the call and with people from Amnesty and so on, are the LPs under talked to and engaged, if you want, the VCs under talked to and engaged. The asset owners, especially in the market environment now, where actually and they have even more power given that there isn't so much free tourist cash anymore floating into the ecosystem. I think working with asset owners who often, and Anna, you mentioned this, manage pensioners' money, state taxpayers' money, students' money, foundational money. So I'm meeting more and more LPs who are in practice, in essence, aligned with, say, more of an engagement of human rights. In practice, they're still not necessarily the push to do that, or, and Kasik was talking about this, the expertise in how to do that. So I think the kind of move up away from the kings and queens increasingly to who these people are made by, namely the VCs and the LPs, the asset owners, from my perspective, is going to prove potentially a good way forward rather than knocking on the tech companies' doors. And they're bigger than states. You can send however many letters to Google as you want. They don't care.
Would I have a left field thought? I think this has been really interesting to be on this call and with all of you. There are areas of sustainability that I know a lot about, and then there are areas that I know a little bit about. And I think one thing that could be really helpful as you try to reach other groups like asset owners is there's so much great work, but it's not obvious who the leaders in this space are. So just like there are marketplaces for goods, if there was kind of like some kind of roadmap of if you need this aspect of AI and human rights, go here, or just something like that would be really helpful for those who are kind of coming up with the learning curve. Maybe that already exists and you're all thinking, wow, we made that last week.
I might jump in with
anything like that, Bhakti, so
oh, sorry.
I think it's a great idea. Sorry, was Anna going to say something? My bad.
No, you go ahead. I can jump in later.
Oh, okay, no worries. I was just going to say, and I mean, again, you know, a lot of times I'm saying things that people have said in some shape or form, but, you know, again, I think the approach to trying to engage with investors is about identifying, you know, still speaking about investors as if they're one homogenous group of people, which they're not, you know, a group of organizations, but really kind of identifying the different groups they belong to. And this is not just VCs and PEs, but really breaking that down further. You know, and so like Johannes was talking about, you know, state pension funds, right? And, you know, Meredith, we've kind of touched base on this as well, you know, is that who we should prioritize? Are they a more ready audience to have this conversation considering their work, and then try to identify groups and then prioritize that outreach? And, you know, so that can be, you know, in a sense, just trying to identify some tangible steps forward, so that would be you know, one of my suggestions. And then of course we talked about ILPA, using ILPA as some kind of maybe foundation or platform to have more open dialogue or initial dialogues with groups of limited partners.
Yeah, I guess I'll speak. I raised the hand. I just wanted to speak on in terms of the ways of engagement. I think, I mean, it could be various ways, but we also had folks reaching directly to us and asking questions, you know, like we're thinking about investing in X company and this is Russia or whatever the country is. And just you know, providing feedback is something that we're always happy to directly. So, and I think it's something that we think is not done enough. So we'll definitely welcome that. And because, you know, there's a lot of effort, as you've seen with NSO and other companies, right? So either like making this kind of smoke screen statements, policies, empty policies that have no power in practice, or not either meaningless or just they're not enacted properly. And I think there needs to be a lot more context, and civil society, we have a lot of information that we can share. Some of it may be public, but some of it can also be private, you know, something maybe we're still investigating. And in some cases, we would be happy as well to share that. So I mean, depending on what it is, but definitely it's in our interest to provide as much as possible information to help you in that decision. So just a one possibility, and besides sort of having this kind of events and facilitated discussions, but also direct outreach, I think will be welcomed, and we've had that in the past.
Yeah, I have a quick question, which I hope is quick. Well, maybe I hope it's not. But Ben and I have been banding around with some oh, they're gonna lower my hand for me. Some language in our VC resource about sort of material risk versus material opportunity, which are not one and the same. And I know that there's some research on ESG funds as having a lower rate of return from sort of general funds. And so I'm wondering if people have evidence to support that conducting human rights due diligence or having that frame or filter might actually be good for business, which we're hoping. And we're hoping beyond just risk, it's it being bad for business. We're actually hoping it will generate more enthusiasm, more customers, bring along a swath of Gen Z customers and people who care about the future and humans and all of that. So food for thought.
I suspect, just building on that, Stephanie, I suspect that the investors on the line would be better placed to answer that question. But
yeah.
But at the same time, I guess it's not gonna be one answer, right? It's just going to be a series depending on the investment climate, political climate, etc. But I guess the focus in terms of articulating that is about long-term value creation, because if you are trying to compare oranges and oranges or apples and apples, then the time frame is going to have to be similar, and that might not play out. And again, I might be using a lot more public equities kind of scenarios, but I'm sure it applies in the same way. And so, if you compare quarter by quarter returns or whatever it is, you're never going to beat that. But and so we just need to frame, when you're creating that, just kind of need to make, to frame it in a way that people can understand that this is going to be better value in the long term, and holistically better, not just profitability. And I think that we just have to continue to push that issue, because if we're just talking about profits and nothing else, I think we may have lost this thing from the get-go.
Anna, do you want to jump in with your comments and then we'll close out?
I can jump in really quickly. I see it's kind of past time, but just maybe a quick comment on that last point. I mean, I see your point, Stephanie. It's a difficult point to make, and also, like, what if it doesn't? So I think one of the things that we've been trying to discuss in our project, and like what we're thinking that we'll continue to discuss using this human rights assessment, is also like that it's about risks to people. It's not about risks to returns. I mean, that it can be that as well, but like there is a floor for what you can do, and there are standards, and there's a responsibility to respect, irrespective of those. So for us, it's been you easily go there, like in the discussions between an investor and a manager, but we've been trying to kind of keep to the risk to people. That's just one perspective. The other thing I was thinking about earlier on was that in private markets, LPs are not very used to collaborating on ESG or other things. So but lately the cooperation that is between LPs is mostly in through ILPA or through the PRI, for example. So so that might be a place to go for speaking with LPs.
And just to point out that there are a number of resources being shared in the chat, which we will collect and then send in our thank you emails for everyone joining us for these 2 hours today. Hopefully you took away something new and you were inspired with maybe some new ideas, and we can pick up on this with some fresh energy and recharged batteries into the new year. I'll also post my email in the chat. Feel free to reach out if you have any questions or ideas, or if you have a specific topic for us to reconvene another space. We're happy to do that as well. But just a big thank you to Johannes and Danica from VentureESG, and for all those who helped to coordinate and make this session possible. Have a good night or rest of your afternoon or morning, and hopefully we'll collaborate again soon.
Thanks, everyone.
Thanks, everyone.
Thanks, everyone. See you soon.